y'all today? We have special guests here to talk with you today. We have our tax administrator, Alan Lumpkin, and he's brought with him his listing supervisor, Amy Lancaster. And we welcome them. Thank you for coming. And they're going to talk to you about the homestead exemption for seniors and individuals with disabilities. And they're going to talk to you about saving some money possibly on your property tax. That's good news, right? We can always look for a way to save money. So Alan has, as a tax administrator, he has some good news for you, right? I'm going to turn it over to him and Amy. Thank you for coming.
Thank you, Paula. I appreciate it. How's everybody doing this morning?
Fine.
Good. I'm glad y'all came today. Like Paula said, what we're going to try to talk about today, I'm not going to limit it to just exemptions. I want you to ask me questions that you have about property taxes. If you have any other questions about anything, just ask us, because we're here to, let you know. If I don't know, I'll find out and, get the answer for you. But the main reason is the exemption part of our program. This is a state program. It's all 100 counties, so no matter if you're in Wayne County, Johnson County, Lumpkin County, wherever you're at, this same program applies throughout other counties. So it's not limited to just Wayne County. There's several programs right now that's in place. The first one I'm going to talk about is the Senior Citizens Exemption / Disability Exemption Program. And what it says is if you're 65 or older or 100% disabled, that's the first tier. You have to meet that criteria first. If you're over both incomes combined. So if you're married, it's like your and your spouse's income cannot exceed $29,500. And that works on the disability part too. The disability part, if you're under 65 and you're 100% disabled, we have another form to fill out, and it just has to be certified by a physician that you are 100% disabled. If you meet all this criteria, what the reward is basically is that your tax value on your house. Say for instance, if your house and land is valued at $100,000, the law says you get $25,000 off or half, whichever is greater. So in the instance I gave, $100,000 value of your house and land, it would cut it in half. So it basically cut your tax bill in half. It doesn't totally exempt you out, but it does give you a break to a certain extent. So are we clear about that one as far as that? Now let's go ahead and stop right there, and let's just ask some questions about this particular exemption program. Any questions on what I just went over? Y'all come on in.
You just said half of the house value, or?
It's either $25,000 or half the value, whichever is greater. Because in some instances, maybe if you have a single mobile home and land, it may be a $30,000 total value. Well, in that case, you get $25,000 because it's 25 or half, whichever is greater. So it's the greater of the two. Yes, sir. Very good question. The question was, if you have a life estate in your property, are you still considered the owner? In our office, you are. Yes, sir. You have lifetime rights. You are the owner. You still get the tax bill, and you can qualify for this program as long as you live. Yes, sir. That's a very good question. What he's speaking of, some people in estate planning type, they may go ahead and deed their property off to their children or somebody, and they reserve what's called a life estate. That means they have lifetime rights until their death. At their death, this deed takes a hold or whatever, and it goes to whoever the remaindership goes to. So, but you still have controlling interest for your lifetime, and that would qualify for this program. Yes, sir. Yes, ma'am.
This program that you're talking about now, how long has it been in existence? Well, what I'm asking, okay, like if you go down on William Street and you're doing your taxes and you get the senior exemption, is it the same as what you're talking about?
When you say William Street now, what are you
Or
referring
the
to?
courthouse is down here, you know, where you go.
That's where we're at, yes, ma'am, that's where we're at. This is the same thing I'm talking about, yes, ma'am,
Okay,
it is. And another thing, good question, if you've already applied for this program, you don't have to reapply each year. Once you're qualified, it stays in place unless something changes, unless your status changes as far as if you, for instance, like, happen to go back to work and start making more income or something like that, then it would come off. But if nothing changes in your situation, it keeps going year after year. You don't have to reapply. Now, there is one caveat to that. We are required to audit all these exemptions during an 8-year cycle. And so you may get a letter from our office just saying you're in this program, you know, what is your current situation, and then you just fill out this questionnaire and then, you know, it continues on. But we are required to audit these programs. So, but it does stay in place as long as once you're already qualified.
Thank you.
Yes, ma'am. Other questions about this program? Yes, sir.
How old do you have to be before you're disabled?
Well, the disability, if you're 100% disabled, the age is not a factor. If you're 100% disabled, you can be 25. There's no age limitation if you're 100% disabled. If you're not disabled, you have to be 65 or older. So the disability part, you can be any age, as long as you're certified by a physician that you are 100% disabled.
91 would be pretty good.
That almost makes it, yes, sir. It does. It certainly does. Congratulations. Any other questions on this program? Amy, did I leave anything out?
How do you apply?
We actually have applications with us today, or either you can come by our office or call us. We'll be glad to mail them to you, or that's what we brought some today, and that's why I brought Amy. She's the expert on this, and she can be glad to talk to any of you one-on-one if you need some help filling those out. It's not a complicated application. It's some generic information. The main important part is the income part. If you have to file income taxes, then we do require a copy of your income tax form to accompany this. If you don't, it's just a matter of giving us copies of the forms you received from the Social Security office and the different W-9s you received in January. It's just a matter of getting copies of those. But we'll be glad to talk to you after the class, and we have some applications with us today. Yes, sir.
Yes, is it pre-tax, the
29.5.
yeah, is that pre-tax or after-tax?
Yes, that's gross income. That's the gross income for anything, like, for instance, you know, on your Social Security benefits, they deduct so much for your Medicare benefits, something like that. It's including that amount too. It's the total income is what's required right now. Good question. Any other questions on that one?
I have
Yes,
one.
ma'am.
If a person is connected with, I said you have a home place, parents are deceased, and the person, where the home is left for all the children. If we want that person that's, right, because everybody's out except one person, and nobody wants the house, you know, she's the only one that's gonna be in the house.
Right.
So she become 100% disabled. Will you all still look at the other siblings' income?
That's a very good question. Let me repeat the question. Basically, she was asking that if, say, for instance, your parents are deceased and the property was left to all the children, and one of the children resides in the house, how does that affect this program? And to answer that question, the income is not, it would be her income that would qualify, because she's the one qualifying, so it'd be just her income. However, since there's other owners of the property, even though they don't reside in it, it's left to the children, or if they're deceased, it could be their children possibly. It could be the heirs of whoever the heirs or the parents were. She may only qualify for a portion. It's limited to her ownership in the property. So if there's 5 people that own the property, then she would get 1/5 of the amount of discount. She wouldn't get the full amount of discount. She just gets just what percentage she owns in the property. That's a very good question. Any other questions about that one? Yes, ma'am.
What if you rent the house?
If you rent the house out, then like I said before, you have to own the property and reside in the property. So you actually have to live there too. It has to be on your residence where you live. You have to own it and live in it. So that's a good question. They're all good questions. Y'all are doing good. All right. We're going to move on. Yes, ma'am. You have a question?
Yeah. I don't know how to ask it though.
Well, we'll figure it out. What you got?
I got a home here on Andrew Avenue, 1011.
Mm-hmm.
And
So your question is,
93 years old.
well, congratulations, first of all, for being 93 years old. So the question is the question basically is, if your daughter reported this, who is supposed to contact you maybe? Is that who's?
My insurance, I raised,
Okay.
I'm a country girl.
Me and you both. I live in Grantham, so. But yeah, you're correct. If you had homeowners insurance, they should be consulting with your daughter as far as taking care of that. So you should be okay on that. As far as the FEMA program, I'm not very familiar with that, but you'd have to talk to somebody in the planning office, Mr. Chip Crumpler. As far as the FEMA, if you're trying to get some kind of FEMA help, the Federal Emergency Management.
I won't ask for no help, I'm gonna believe that.
But I'm sure your daughter's probably taking care of the insurance part of it, I would imagine.
I hope she is, I don't know.
Yeah, I'm sure she is.
I'm a country girl, I'm not all that.
I'm going to talk about another exemption we have, but think of your question. If you think of something else, we'll come back to that other one, okay? The next one I'm to talk about is the disabled veterans exemption. And on this one, you have to be 100% disabled, honorably discharged veteran. Okay, I know I said a lot there. It's 100% disabled, honorably discharged veteran. In other words, with a service-connected injury. And the 100% is very important to this because there are a lot of people that have disabilities from the military, but they're a certain percentage. They're not 100%. Some are just 40%, 50%, stuff like that. So you have to be 100%, and this has to be verified by the VA. So there's a separate form for that verification. So that's very important. On this program, there is no income limit. In other words, there's not an income limit on this program. You can make any amount of money. There's no income restriction on this particular program. You do have to be a North Carolina resident and reside in your home, just like the other one, just like the other program. But this one is just solely based on being a 100% disabled veteran. On this exemption, what the benefit of this exemption is, you basically get $45,000 off of the value of your property. So the other one was $25,000 or half, whichever is greater. This one's strictly just $45,000 across the board. So if you had a $100,000 house, they take $45,000 off, you're taxed on $55,000, which would be the balance. And this, again, we have the same application. It's basically the same application. It's just a different section of that you fill out for that particular one. Another thing, too, June 1st is the deadline each year. You can apply for these programs annually between January 1st and June 1st. So that gives you plenty of time to do your income taxes and all that kind of stuff. So there's plenty of time to get those applications in if you have not already done that, if you're interested in that.
And what date did they say?
June 1st will be the deadline. It's anytime from January 1st through June 1st. And that's the annual law?
June the 1st?
Yes, ma'am.
Through what day?
No, it's January 1st through June 1st. June 1st is the deadline each year. So if you miss that, you have to wait till the next year. So it's January 1st through June 1st.
Okay.
And our tax bills usually go out sometime in August.
And you said if you're signed up already, you don't have to.
If you're getting exemption already, in fact, if you're not sure if you're getting or not, if you look at your tax bill from last year, it should have it on there. You'll have a full taxable value, then it'll have an exemption amount, and then it'll have the net value. So you can sort of look on your tax form, or you can call us. We'll be glad to verify it for you. But if you're already in the program, then you should be fine. Unless you get a letter or something from us, you're good. And again, if you're not sure, just give us a call. We'll be glad to verify it for you. On the military, the veterans exemption, any questions on that one? Now there is one part of that if you are a military veteran, disabled veteran, and you have a specially adapted house, sometimes the VA will come in and adapt houses. If you're restricted to a wheelchair or something like that, they will actually come in and adapt your house. They will lower the counters and widen the doors for the restrooms and stuff like that. If you've had that done to your property, that also it results in the same exemption also. So I think we may have about 12 to 15, I think, last time I checked of those in the county. But we know most of those. Usually they report those to us.
What, would you consider, like, if you have a house sitting in this area, but you have extra land property, could that be considered as part of the exemption?
Very good question. An example of that is, say for instance, you live in the country, like me and this lady over here used to. And if you live in the country and you had a 100-acre farm, you had a house on that 100-acre farm, and if you had 100 acres, 99 acres you farmed, and an acre was for the home site. This is restricted to your house and the lot it sits on. So the exemption only applies to what we call the home site. The extra acreage would not be in this program. It'd just be the house and the land it sits on. Usually it's around an acre we break out for that, but that's a very good question. Because a lot of people have excess land, and like say if you had 2 or 3 lots and you have a house on one of them, it would be restricted to just the lot and house that you reside on. The other 2 lots it would not affect. Very good questions. Yes, sir.
The DA has a lot of different versions of that 100% you're talking about.
They do.
Now, what is a 70-30?
A 70-30?
Yes.
I'm not familiar with that 70-30, but I'm
70% is what you call, let's call it disability.
okay.
30% you can, all VA help doctors and things.
For the health benefits. In that case, as far as our program, the 70% is what we're looking at.
But your paper says for 100%
What paper is that?
that you get from your VA.
Right. But
You're awarded 100%.
you're awarded 100%. But what we can do now, we'll be glad to check with the VA. You can check with the office next door, but we have to send this to Winston-Salem, and that's where they verify this 100% at. And they know the rules of this statute, so it depends on what they send back to us. If they send back 100%, then you're 100%. So again, I'm not sure about that 30% deal, but we'll be glad to try it for you if you're not in the program. Any other questions? How about just questions in general about property taxes or anything like that, as far as Wayne County? Any questions at all we can help? Yes, sir.
One other question, that just came to mind. Does this, 29.5, does it ever go up?
It does. Good question. It increased a little bit. When I first started here, when they first started this program, I think it was like maybe 18,000 or 17.5 or something like that, and that's been years ago. They do increase it, I wouldn't say annually, but it does go up a little bit periodically, and it's based on the cost of living increase. So it does change, yes, sir. It has increased over the years. My opinion hadn't increased like it should, because basically 29.5 is if you got medical bills and stuff like that, that's a limited income, but it is the gross amount too. So I'm not sure. This is a state law, so your legislators are the one that dictate this. So if you think it should be higher, or if you have an ear to your legislators, I encourage you to talk to them about that as far as getting that income limit raised. But currently, it does. It is the 29.5, and it does change a little bit, but it's usually not a lot. Good question. All right. Yes, ma'am.
You had said if we weren't sure of our status with the program you're talking about, that we could ask you and you check into it.
We sure will.
If we ask you today and give our name and whatnot, can you get back to us?
We sure can. We got some pads up here. We'll get your name and phone number. We'll be glad to verify it for you.
Thank you.
Give you a call back. Sure will. Amy, anything you'd like to throw in? Amy, like I said, Amy deals with this on a daily basis, and she sees a lot of the stuff I don't see. So I'm not sure if there's anything you can see that you might want to share. I don't know of anything. I think we covered everything for the most part. Paula, you got any questions?
They have some great questions.
Yes,
I mean,
very good questions.
So I've learned a lot from their questions and their answers and everything. Everybody feel satisfied with, I mean, you gave some great answers. Thank you for being so informative. Is there anything else you wanted to add, or?
I don't know of anything, unless you have any questions. I mean, as far as the tax office, we are in the courthouse, and we have some cards here with us. We'll be glad to give you a card or whatever. You have questions, we're there 8 to 5, Monday through Friday, so feel free to give us a call.
And you said you have applications today?
We do. In fact, once they finish, if you want to step over, Amy and myself will be glad to talk to you individually if you'd rather do that, and hand out applications if you need one or whatever. And we want to get your information too to make sure we check on yours. All right.
Well, I so appreciate you taking your time today, and I know you're very busy, tax time and stuff, to come and talk with us and give us information. I think it was very informative. Thank you so much.
No problem.
I've learned a lot myself that hopefully I can share with seniors as they come through and have questions as well.
That's a good point. What y'all learned today, share with your neighbors that aren't here. You know, I know you see people coming and going daily, so share this with them if you will. A lot of times people don't even know it's out there. We try to put it in the paper, we advertise, but a lot of people, they don't get the word out. So y'all tell your neighbors and friends about this program. Any county that it went, yes ma'am. All 100 counties have the same program. It's a state mandated program. So any 100 counties, the same exists in all counties. Yes ma'am. Sure does.
And tell them to watch Channel 10 for the
That's right.
recording it. And they can hear the questions again.
Sure, certainly. Thank y'all so much for having us.